I'm Matt Bichard with NAREIT.com here in New York City for REITWeek 2015 NAREIT's Investor Forum. Joining me for this CEO Spotlight is Tom McGuinness, President and CEO of InvenTrust Properties Corp. Tom, thanks so much for joining.
Thanks, man. Appreciate it.
Now, it's been a busy several months for your company. InvenTrust became self-managed last year, spun off its lodging platform in February, and adopted a new name in April. What are the main priorities at this time as you absorb all these changes?
Well, actually, just to add a couple of things to your list, we also, in the last 2 years before that, we sold all of our apartments. We did a $2 billion transaction on a big chunk of our triple nets. So in the last 2 years, we actually bought and sold $4.2 billion worth of property. So it has absolutely been a busy couple of years for us. Really going forward, we think of 2015, we need to refine our 3 business units, which is retail, student housing, and our non-core, which is office and industrial. So with respect to our retail, we're in more markets than I'd like to be in. I'd like to kind of recycle our capital, get into a smaller number of markets, and then develop kind of a hub and spokes, boots on the ground kind of an environment where we have management and leasing offices within each one of the markets. The hub and spoke gives us a little optionality to maybe go outside of those metro areas. So let's say, for instance, in Washington, D.C., we'd have Baltimore and also Richmond, Virginia. Our student housing, we really think we already have kind of a best in class, so just continue to give it additional scale and then keep doing what we really have been doing. And on our non-core properties, we think that it's a continuation of renewing leases, leasing, and then ultimately monetize those assets.
And drilling down to your shopping center business, what do you consider your core market and how are you finding the competition there?
The competition is very tight. There's not been a lot of new development going on, so acquisitions are very difficult, very hard to come by. Our markets really, we already have a presence in Atlanta and Dallas, Houston, several other areas, but really the driver for us is to go where we think the jobs are. So, because if there's jobs, you'll always do well no matter what the asset class is. So it is continuing to develop our leasing and property management and operations out in the field and continue to refine, recycle out of the assets the areas where we only have one asset and continue to recycle into these hub and spoke model.
And on the student housing side, you know, it's still a relatively new sector in the REIT world. How is your company's acquisition development pipeline as there is more players in the business?
Acquisitions have been extremely difficult to come by. You know, we try to stay true to our thesis, which is walking distance to campus. We want to stay a mile from campus. We want to have purpose-built student housing buildings. We want to have a higher 1-to-1 ratio bathroom to bedroom, which students are really demanding today with all of the technology and business centers, swimming pools, and things of that nature. So with that criteria, it makes it very difficult for us to acquire properties, which means that we've been much more of a developer than we would normally have wanted. We would rather have more of a 50-50 ratio of acquisitions and developments. It's really caused us now to be more of a builder, which is okay with us. We have a dedicated development team in Dallas. So we built across the street from the Wharton Business School, Cal State Fullerton, Georgia Tech, University of Texas at Austin. So we've built now, most recently, in great markets. The side effect is really very much a positive one, because now if you take a look at our distance to campus compared with the public companies, we're closer to campus. Our average age is a little over 3 years. So because of the acquisition environment, it's forced us to be more of a developer, which does have a very positive side effect out of that.
Great. Tom, thank you so much for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.